Hello, everybody. Welcome back to Hugh's Market Minute. It's been a while since we've talked to bring you up to date on what's going on in the financial markets and the economy. Especially now, it's important that we get up to date because there's so much going on and it's creating a lot of volatility, a lot of sort of on again, off again in the markets. Number one, of course, right at the top of the list is we've seen the attacks on Saudi Arabia and the rise in oil prices. And it raises a real question. The question is, are oil prices going to stay higher? And if they are going to stay higher, is that going to end the current stock market, bull market, economic recovery, interest rate cycle? That's been a big question on our mind for a long time, largely because, this has been such a long cycle, and we're now at the 126-month mark of the bull market. It's the longest in history, and the 122-month mark for the economic recovery, which is the longest economic recovery in history. So we've really got to be on our toes. A couple of weeks ago, I and the markets would have said it looks like we're at the close or the end of the current cycle. That's because we had things like very technical stuff like the yield curve sending us a signal that indeed we are headed towards the end of the current cycle. But since then, things seem to have changed a little bit. And what's really changed is that, first of all, we've gotten some numbers that are pretty good. We've gotten numbers on retail sales, which shows that the consumer is doing very well in the U.S. economy. Consumer sentiment, consistent with the retail sales, has been strong for the month of August. That was really good news. And then what might not sound like good news, but was good news, is the core rate of inflation got over 2% on a year-over-year basis, 2.4%. That was all really pretty good news, and as a result, the markets adjusted. The stock market went up, interest rates went up, and the markets started to send us a different signal. And the signal was that we are not, after all, at the end of the current cycle, but we have further to go. And I think that's kind of where we come down right now. I would say we probably have further to go in this current bull market. The one thing that's been missing from this bull market, and I think everybody kind of feels it, is a lack of optimism. If there's anything, optimism is very low, and bull markets simply don't end with this low level of optimism. So I wouldn't be at all surprised to see the market go a little bit higher in response to good numbers, go a little bit higher, that optimism will increase, and then maybe, when we get to November and December, we'll have more optimism and we'll start to get those signals that we're going to, at long last, have something that might be close to a bear market and an economic recession. As I say, trees don't grow to the sky. This cycle can't go forever. We almost, in some ways, would greet a bear market and a recession if it's not too severe, and I don't think it will be too severe, and we would greet it as an opportunity or at that time in which we can start a new bull market. We need to start a new bull market. This one's been simply too long. So I think if I were to take a guess, and it's pretty grandiose to do anything but guess, I'd say we're okay for now, and as a result of that, we're keeping a meaningful allocation to equities in all our portfolios. We're okay for now. The bull market has a little bit further to go, but we're certainly on our toes, watching the performance of the financial markets very carefully, the performance of important economic variables very, very carefully to see if we can see signs that indeed this bull market and this economic recovery are coming to an end. I'm sorry to be away from you folks for such a long time. What's very important to me and to everybody here at Hugh Johnson Advisors, and now really Bender Lane Advisory and Hugh Johnson Advisories, is to invite you to call in, to talk to us, to give us your thoughts on what's going on in the financial markets, your questions on what's going on, your questions either about generally the economy and the financial markets or on your individual portfolio. We love talking to you. So give us a call when you get the chance, and we'll be on very shortly, again, 2-3 weeks at most, and bring you up to date on what's going on. These are very volatile times. I know they're very unsettling to some of you, and that's why we look forward to talking to you and getting a good handle on things so that you can understand that this is not the first time we've been through this set of events. Great talking to you again, and look forward to you talking in the near future.